Small stocks are about to take over. Suddenly, smaller stocks seems to be making bigger noise on Wall Street. After getting trounced by the larger rivals for years, some of the smaller stocks on Wall Street have shown much more light recently. Hopes for coming costs of interest rates have pushed investors to look at smaller stocks through a different lens. Smaller companies, which often carry heavy debt burden, can feel more relief from lower borrowing costs than huge multinationals. Plus, critics said the big tech stocks that have been carrying the market for years were looking expensive after the meteoric rises. The small stocks in Russell 2000 index leaped a stunning 11.5% over 5 days, beginning on July 11. The surge looked even more eye-popping when compared with a typical gain of 1.6% for the big stocks in the S&P 500 over the same span. Investors pumped $9.9 billion into funds focused on small U.S. stocks last week, the largest amount since 2007 according to strategists at Deutsche Bank. Now, there were all encouraging signals to analysts who say a market with many stocks rising is healthier than one dependent on just a handful of stars. If this all sounds familiar, well, it should. Hope for a broadening out of the market has sprung up periodically on Wall Street, including late last year. Each time it ended up fizzling and big tech resumed its dominance. Of course, this time looks different in some ways. Some of the boosts for small stocks may have come from rising expectations for Republicans sweeping November's election following President Joe Biden's disastrous debate performance last month. That pushed U.S. stocks seen as benefiting from a White House that could be hostile to international trade, among other things. Traders are also thinking cuts to interest rate are much more imminent than before, with expectation recently running at 95% confidence that the Fed will make a move as soon as September, according to data from CME Group. But some professional investors still aren't fully convinced yet. Fade the chase in small caps, which is likely unsustainable, according to Lisa Chalette, Chief Investment Officer at Morgan Stanley Wealth Management. She points to how 60% of the companies in small cap industry struggle with profitability, in part because private equity firms have already taken many money-making ones out of the stock market. Smaller stocks also tend to be more dependent on spending by consumers than larger companies, and consumers at the lower end of the income spectrum are already showing the strain of still high prices. Cuts in interest rate do look more likely after Federal Reserve officials talked about the danger of keeping rates too high for too long. But the Fed may not pull rates down as quickly or as deeply as it has in past cycles if inflation stays higher for longer, as some investors suspect. Small stocks, which have struggled through 5 quarters of shrinking earnings due to higher rate, also are less likely to get a boost in the profits delivered by the artificial intelligence wave sweeping the economy, according to strategists at BlackRock Investment Institute.